Hi everyone, thanks for checking out another Learn, Grow, Invest meeting. This is our first meeting for 2021, so we hope that you're all doing well, keeping safe, and that you are, just in good health. So what we typically do here before we start our meetings is we open with a word of prayer. So we'll do that right now. And the main focus for today's meeting is the proven APO that is currently set to be released on January 8th. At the time of this recording, it's January 6th. So we are a few days early. So hopefully, if you're able to check this out before then, it will help you to make a decision on this offer. So I'm just going to jump right into prayer, and then we just have our opening remarks. So Lord, we thank you for bringing us to see another year. We thank you for health. We thank you for just your covering and just being our God. So as we go through this meeting, we pray that you will be with us. We pray that the technology will hold, that everything will be well, that there will be no issues, and that for everyone who needs to make a decision on this investment, that you'll direct them to this video, and that we'll all be able to learn and make an informed decision. In Jesus' name we pray. Amen.
Amen.
All right. I'm joined by Chike Verwe, our resident analyst. So Chike is the member of our team that will, serve as a person to really dig into the financials of a company for us to be able to make a decision on it. At Learn, Grow, Invest, we are a community of investors. So there is not one person that provides content. And if this is your first time, you'll notice that trend. If you go through our videos, you'll see, multiple presenters from multiple backgrounds, all in the hope to provide you a diverse set of information that will allow you to make better investment decisions. So you're free to connect with us on all the platforms listed on the screen. We're on Facebook. We have a private Facebook group that you can join to get resources. So the PowerPoint we're using today, you can get access to it in our Facebook group. We're on Twitter. We're very active on Twitter. And I know a lot of the persons who join us for these meetings are from Twitter. So, shout out to that community. We're also on Instagram, and we have a LinkedIn page set up as well. So if you're on any of those platforms, along with YouTube, feel free to connect with us there, ask questions, leave comments, give us ideas for videos and topics that we can cover. We want to be able to provide value to you in any way that we can. So we're just going to do a brief introduction since this is our very first meeting for the year. So I'm Jeremy McDonald. I'm the co-founder for Learn, Grow, Invest. We started Learn, Grow, Invest in January 1st, 2018. So we're just 3 years old. And our focus is just really to provide investment content to allow persons to make decisions, as I would have said before. And you're definitely free to reach out to me at any time on any social media platform. Next, we have Chike Verwe, who, I'll allow him to introduce himself. Chike, go ahead.
So good night, everyone. Again, once again, all the best to everyone out there that is tuned in for the new year. We hope that this will be financially and otherwise, this will be a very prosperous year for you all. So I am the resident analyst currently of our group, among a host of really great team members from the primary of varying backgrounds. I am an application engineer by day and a moonlighting investor by any other time, and have a passion basically for the world of investing. I am also a value investor. At least I try very much to stick to that path of being a value investor and holding things for the long term. So a lot of the analysis is based on that premise that we are looking for good companies, not just stock, and we are also looking for good investments. So the Learn, Grow, and Invest Club, as Jermaine has stated, is not one just about companies, but it's also about many varying different securities, as they are called, whichever one is favorable at the time. So yep, that's basically me, and what I provide for the team.
Yeah. All right. So, I mean, three key things I just want to leave with you, just in case I don't get the chance later on, is that really focus on three main areas. And that's why we're called Learn, Grow, Invest, is that we want to be able to provide you with resources to help you make better decisions in investing. We want to also provide resources that will help you grow as an individual. So that means we'll be covering topics later on this year to cover areas like debt management, maybe real estate, maybe personal development and growth. Those topics we may touch on as we deem relevant to our community. And the final and probably most important thing is that with the information we provide, you should be able to make better investment decisions. So those are the things that you can say serve as our foundation. That's what we try to stick to. We won't be deviating from these pillars anytime soon. We try to make our content free. It doesn't mean that from time to time we won't recommend persons who might have paid services or offerings that we think will benefit the community. So, look out for those things as well. And let's just jump right into why we're here today. So, Chike, you have any initial thoughts on Proven before we start?
Sorry about that. Well, we know once again that Proven, there have been many persons have presented on the Proven APO. So most persons, or a lot of people, should be aware of what they're coming for, and you can see it there in front of you right now. My thoughts as we get into the actual, from the financial standpoint of the company. This has been genuinely a company that has put their money to work, and they're seeking it in one of the best ways, which is for those persons who are not aware of how companies raise capital, as it's called. They're either going to do it via the way of some kind of debt, which is normally in the shape of a bond or a loan that might be from a financial institution, etc. Or they do it this way, where if they're not listed on a stock exchange, they become listed, and that's their IPO. And if they're already listed, they do an additional public offer of putting out additional shares to raise additional capital, and that's what Proven is doing right now with their APO. It's also, in my view, one of the best ways to raise additional capital without having to incur some kind of debt repayment in terms of interest rates for the bond or interest rates for the loan, etc. And it really just entails the company's principals giving up a little bit more of the company. You can look at it that way. As they call it, the term is dilution. But at the same time, it allows for investors who are keen to take an interest in basically being an owner of a good company. So if they believe the company to be good, that is, and they want to take a part in it, to own that company for years to come and to reap the rewards that come with being a shareholder in the form of dividends, etc., that is normally paid out, and having a say in the direction of the company by casting their vote at their meetings. So
yeah. So just a brief history, just in case you may not know about this. So Proven actually tried to go to market with this offer in March of last year. The very first day, I believe that we had, registered our first case, or the first case was announced, something to that effect. And it was, they had to essentially recall it at the time because it was just not going to be likely to be, taken up in any substantial amount. So they, kind of withdrew at the time and decided to kind of watch and see how things would play out. I know they had maybe an AGM, I think in August or September, where they said they were planning to release it within the next 24 months. And so here we have it that they've decided to release it now. And I guess they would have, watched and see, whether or not they thought the market would have been able to take advantage of that raise. I believe the offer is a little bit less than they would have originally asked for, but those details you can find out online. We won't really belabor that point right now. Details on the screen, take it for what they are. Let's move on. All right, so in terms of the offer itself, this is what they're asking for. 89 million new ordinary shares are being asked for with the ability to upsize. And this is just really based on what the take-up is. So for those who may not understand this concept, typically there are shares that are awarded, and you normally have some reserved based on the type of investor or shareholder likely to take it up. So what you see here are key investors. There's an allocation. For existing shareholders, there's an allocation, and non-reserved would have its allocation as well. So what they do is see how those go. If it goes well and more persons are it's in high demand, then they will have the chance to upsize it up to a maximum of 134 million new ordinary shares. And then in terms of the price of the offer, based on those same different categories, now you'll have the price according to which category you fall in. So if you're not an existing shareholder, your price would be $33.50 on the JMD side, 23 cents US. Existing shareholders would be $32.80 or 22 cents US, and for key investors it would be $32.10 and $32.10 Jamaican and 22 cents US. And this is just really to help you understand. So depending on where you fall, that's what your price will be. One of the common questions we'll find is that persons will ask, what's the date that I need to own it to be eligible for existing shareholder. I think that would be in the prospectus somewhere, Chike. I don't know if you remember that date, but typically you need to be an existing shareholder at a certain date to qualify. It's not like you can buy it on the day that the offer is released. So watch out for that. And key investors would typically be identified in the prospectus as well. So when we go through that, we'll see what information we have there. What we also try to do before we jump into the prospectus, based on today, I checked on JTrader, the last traded price on the USD was 24 cents. On the JMD was 34.40. And I tried to go back as far as a year or as much as the data on JSE would give me. And at January last year, we see that they were all-time highs for proven. So I mean, naturally with COVID, prices would have gone down a bit, but this gives you an idea as to how well the stock would have been performing before COVID. So those who think that with vaccine news things may recover, you have an idea as to where the company could potentially go. But it depends on your goal, right? Ultimately, you'll want to make a decision as to whether you think this company will meet your investment goals, whether that be short term or long term, whether you want to go for dividends or whatever it is that fits into your investment profile, right? And this is just a snapshot of the queue as at today. This would be the US. And this would be the JMD. So if you don't have access to JTrader, then it's easy to set it up and have it linked to your brokerage account. I think they're affiliated with up to maybe 9 or more brokerage firms right now. So it's easy to get started, and that will give you access to the information that we're showing on the screen.
All right.
So yeah, I think we can get into it now, Chike. All right. So let me stop sharing for a sec and bring up PowerPoint. All right. So do we start with the prospectus, Chike?
Yeah, and specifically, I wanted everyone to see page 9. 1 second. Page 9 or 10. I just actually found it, which is the corporate structure. Page 20 of the document. bring that up, please,
Okay.
so that everybody at least has an understanding of what proven is, and what they're about, because that's where we're gonna attack this from. So right, so proven structure is basically made up of, let's see if we can make that a little bigger for everybody, right? So it's basically three parts. There's the proven management limited, there is the proven investment arm, and then there's the proven associate companies that are there. Basically what we, as we were discussing this last night, what we've identified and what we are aware of is that proven is really an equity company. They basically make they take the capital that they acquire, and they basically make investments in different companies for the purpose of doing just what companies do, which is basically generate revenue and reap a profit. And they do this for the different holders that are invested in the company, whether it be the regular shareholder or the persons that are putting up the capital into the company, as investors, accredited investors, etc. So over the years, actually, and from this structure, as you can see, Proven has grown what they hold very nicely. They have arms all over, well, primarily in the Caribbean, and they have their wealth side, or should I say their investment side, firmly in Cayman Islands, with the Boston Bank, and also the International Financial Planning Limited that is there, as you can see, in Cayman Islands. They have another few areas. Let me just see where we are with that. The next page, the company profile, which is page 21.
Mm-hmm.
Right, tells us what basically the three arms of Proven and what they're into. The private equity, as we just stated, dealing with the financial services and the real sector, and then they do real estate, and then they do treasury and Proven investment propriety. So that base, and from that they have different holdings in those three entities. For the different, they're made up of basically subsidiaries and associates. For their subsidiaries, one of the ones that we paid keen attention, well, not just keen attention, but in terms of what they're holding, the Boston Bank Limited, they have a 75% shareholding in that, and that makes it a subsidiary company. They hold 100% shareholdings in real properties. They also hold 100% shareholding in Proven Wealth. And for their associate companies, they have Access Financial Services, for which they now hold 24.72% as at 2020. In 2019, however, they had a bigger stake, and that was 49.72%. So basically, between 2019 and 2020, they gave up a 25% stake. And a little interesting set of information that we came across, or was given to us last night, and shout out to David Rose for that. In our discussion with him, he had let us know that one of the figures of when they had actually acquired Access Financial, their stake in it, the payment that they made for it was, they paid about $8.34 million US, that is. And when they sold the 25% stake for Access Financial, they sold it for $24 million. For us, that just shows what Proven does in terms of being that type of firm that makes sound investments. They hold their investments for a period of time, extended period of time, until they can make basically an extraordinary return on it, when on those investments, when the company deems that it should either remove themselves completely or scale back a bit in terms of reducing their exposure. And it's not to say that their removal from any of the entities that they might sell a stake in is because they view it, they don't view it as favorable. It's just that it's the right time. If using the Access acquisition, You buy it for $8.34 million, and now you can sell it back for 24, right? That's 3 times. So and you don't even have to sell the entire thing. You just they just sold. They just gave up 25%, right? So as you can see, they still hold 24.72% stake in Access, and that's just what they do. They did that also for Nuts for the Express. Unfortunately, I don't have the date that they did that as well too. But when they sold that, that was also for a huge amount of profit as well too, when they exited their stake in that. So that's what they do. As you can see on the screen right now, another associate that they hold is the Dream Entertainment Company, and it more than likely would have been that had COVID not hit Jamaica, and not even just Jamaica alone, because Dream Entertainment is not just Jamaica anymore. It's over in the United States as well too. If you know them as the entertainment company that puts on Dream Weekend and has transcended to doing that not just in Jamaica but in Miami, Florida. I think it's Miami, Florida, but in Florida, etc. This would have been possibly a watershed year or a very big year for them had not last year, I should say, in 2019, had COVID not hit for them, and should have brought them, and by extension Proven, an exceptional return. We will see what happens in 2021 going forward. Now that, as Jeremy mentioned earlier, there's a vaccine. There are multiple vaccines actually that are out and on the horizon to be doled out, already being doled out in the first world countries that made their purchases, that could afford to make their purchases early: United States, UK, and Europe, etc. So we'll see where it goes from there. But Proven is clearly on a path from what we have seen for further, not just expansion, but putting their capital to work to make returns, to get those really good returns. We don't have it on screen here, but you would have seen their stake that they made in the Massey companies. It was in the news recently, and there was also a write-up by I'm trying to remember. It was David that did the write-up, right? That did a write-up on Massey today. But of course, here we have, right, so we have the Proven stake. They've basically taken a 50.5% stake in the acquisition of Roberts Manufacturing from Massey. Now, as we were discussing this last night, I was a bit puzzled because from what Proven has seen, I was wondering why they would go into a production or manufacturing company. But as David was pointing out to us, this is just what they do. They're meticulous in looking for very good companies, or companies that they believe have the ability to provide them with maximum returns as they can get. So with that, we can only look forward and look forward to see how this will play out for them. Clearly, as you can see, that's a very large stake that they've taken in that outright 50.5%. So we definitely can look forward to see how that will turn out in the years to come, because it's not going to be acquire it this year. They normally don't do that. It's not acquire it this year, sell it back next year. They are willing to hold their companies for a few years, willing to watch them grow and reap the returns, and then either remove themselves completely or bring their stake down. So we'll see where it goes from that.
What I do with them, Chike, in terms of how I think of them. So one of the first things you do as an investor is try to understand how a company makes money. So they make their money essentially through capital appreciation of the assets that they purchase. It's really a very simple way to think about it. So when they take a decision to buy an asset, they're thinking, and this is what you won't know, right? You won't know the time horizon they have in mind, but typically you can look at the investment and say, well, if it's a sector is not doing well, then you could probably say, well, they made a deal on it and they suspect that the asset may be valued more long-term, which is what every single investor does. You buy an asset with the expectation that it will appreciate in capital, or it will give you enough cash in the way of dividends for the investment to make sense. So that's how I look at their acquisitions. If they're holding a company, it means they're bullish on the company, and they think that long term it can continue to provide the same returns that it has. And if they've sold a company, it could either be to just have more cash to be able to make other deals, or they just feel like they've accomplished their goals and it's time to move on. So it's pretty much what every single investor does, you know.
Mm-hmm. And then another point that persons might not remember, or some might not know and some might not remember. We didn't know last night. Proven is actually is the first company to list on the USD side of the Jamaica Stock Exchange, which they did in 2011. So again, shows you who they are and what they're about. They're about making those bold moves to try and to maximize their returns, you know, in that sense. So yeah. So with that, I mean, the prospectus is there for everybody to read. It has been ventilated by multiple other persons. So our focus really tonight is really about just adding a little bit more in terms of to the financials. And again, I'm also going to give a shout out to Simon Johnson for Stocks and the Rocks, and a presentation we saw him do yesterday for Burrito as well too. Very pictorial in that, you know, they very descriptive about where the company stands, etc. And we are basically about to, in a way, add to that in terms of when we pulled the financial information from them. But we want to just we're going to try and keep it as simple as possible in looking at that financial information, where we are. So for those of you who have been or attended our meetings before, when I normally pull out the charts of a company, as I always say, I basically have a few thresholds that I use. These thresholds are specific to me, and they're actually, as I said before, based on using it against US companies. So the companies is basically being viewed at a very high level in terms of how those thresholds stand out. I just did a little bit of coloring to make it a little easier to see, hopefully everybody can see it properly. So as a long-term investor, as a value investor, standard thing is that you're looking at no less than 5 years of data. You can look as far back as you want to. So I basically went as far back to 2011 and then came forward to 2020. Their financial year, Proven's financial year, ends in 2020. I normally look at it do the analysis from the viewpoint of the yearly financials. Why? Because we're trying to establish a trend, and you'll see that actually in the charts when we get to that point afterwards, based on this first part, which is the balance sheet. For the company of itself and who Proven is, basically, as you can clearly see, there are a few things to pay to that would stand out on the numbers. As you can see with their assets, they have, and this is in US dollars, by the way, so their assets, they have grown that steadily every single year. 2020 is between 2019 and 2020 is pretty much a solid growth there of, as we can see, that is, well, it has been about 5, as you can see, equity, that's equity growth, sorry. There's a capital, is the capital employed? I missed that, I'm so sorry. But we've basically, that's about what, close to 100 million, sorry, in growth. My maths is a bit off there, but they've steadily grown it every single year and only seek to improve it. We can basically chalk though 2020 up to COVID and what has happened. Although the financial year for them, as I said, ends in March, so COVID would have just been starting. But they have basically been putting their capital to use, growing their asset base in terms of the companies that they're either holding as associates or actually hold outright as a subsidiary. Another good thing to look on is their equity as well too. Equity has also steadily grown over the years, and while it has dipped a bit in 2020, it's still poised to, based on the latest acquisition that they had. We kind of want to expect that it would definitely be just as good going forward. So as we said, this company does things for the long term. So you might have a dip this year, but you can more than expect going forward that it will definitely bounce right back for them. Their debt goes lockstep with that in terms of how they do their debt, focusing on, well, at least the debt to their liabilities. It's not close, but it's not very low, but that's understandable because that's what they do. Again, they either use debt, or they're gonna get capital from doing what they're doing now, such as the APO, right? Then we move down to the ratios that we pulled out. So one of the things that I was a bit concerned about was their equity growth, basically, and that is taken from the difference of equity year on year. We had a couple of dips there in terms of 2019 and 2020. So we'll be looking at that because equity is basically the money that is going back to you, the shareholder. That's where you get your payments from. And you can see that in 2017, they had, well, actually before 2017, in 2015, they had a really good year in equity growth, being at that point, it was the highest at 62%. And then it started to gradually come down. We will see what this year brings for them. Even though the equity growth has been coming down, still you recognize that the assets of themselves keep growing. So as they add very good companies that will give them return, you can expect to see that bounce right back. The other ratios, though, in terms of their debt to their equity, I have it as green based on the threshold that I use. It basically comes out as being extremely favorable, which means that they manage their debt well based on the threshold that I'm using. And it means that for their equity, it is not primarily made up of debt, right? So that's something very positive for a long-term investor. That's what we look for. On the other side, with the debt to asset ratio, well, I mean, that has improvements. It actually was improving, but it needs to, and it's coming down a little bit more. It actually had dropped, as you can clearly see, for 2018, and then went up a slight bit 2019, and then 2020. So we'll look to see how that goes, but not too much to be concerned about that in that way. So for those who know what the asset test ratio is, basically it's also called the quick ratio, and that is basically looking at how much in terms of their current liabilities and their current assets, how that shapes up. So the asset test ratio for them, based on the threshold that I'm using there, we found that to be extremely favorable as well. It goes green. It has been green since 2011. Though it has a little bit of a dip coming down, still favorable. So companies, as I can say overall, companies that have these ratios in terms of the thresholds that are being used, when it turns green, that's favorable. That's something you want to be paying keen attention to, because that means that the company is managing what they're supposed to be doing, either well, or at least they're managing it how it's supposed to be. Things of concern is normally when things start to go red. Now, I know you might have questions and say, well, then there's the cash ratio, and the cash ratio is in red. And the truth is, companies don't normally hold a lot of cash, and you won't expect a company like Proven to be holding a lot of cash for an extended period of time. They put their cash to work. So pretty much it would be expected that it would look like that. The moment I would see the cash ratio in green, I would start to wonder if Proven is planning to do something big again. right? In terms of maybe an acquisition, etc. So that is basically the ratios, but not necessarily the key point. The key point is the graphs that are formed from these ratios and from the information that you see here in front of you, in terms of the trend or the direction that the company's financials as they perform has been going, from what we found. So Jeremy, you can go to the next set. So putting that information that we had on to a graph and to a trend, you want to see definitely debt to equity going down. So even if, as you can see, they had a little bit of an uptick in 2016, but regardless, the general trend of the company is that it is going down. Now, I'll make a reference to Warren Buffett. When he does value investing in this way, he is looking to see how, or he has always said he has been looking to see the company either doing steady trends of either upward or downward, depending on which direction is supposed to be favorable to the company. So for debt to equity, that is trending downward, and that is something that we want to see. The debt to asset, though, however, is trending upward based on what is being seen, but we will keep a look on it, because as you can note, you can see clearly it had trended downward and then it just basically went a bit flat. So we're gonna let that one go a little bit for now, based on the fact of the more important one I like to look on, or I like to pay keen attention to, is the debt to equity. And then we have their financial leverage ratio. That one also is trending downward. That's something you want to see. And then this is actually a new trend that I added, a new graph that I added recently to my analysis. It's actually taken from another side, which is on their profitability, and it's how their debt of itself stacks up to their earnings before interest, taxes, depreciation, and amortization, as they call it. And as you can clearly see, that has, for the most part, been flatlined after that huge spike in 2015 from the calculation that I did. I might get corrected on that based on it. So, but for the most part, I know at that point it has been relatively flat for, this is what, the last 3 years, from 2017 when it started, well, actually from 2016 when it started to trend downward, and then flatline basically. Next chart, Jeremy. Next set. So we were looking on equity and long-term investing. We like to see equity going up, and that is exactly what they've been doing. As you can see, we put those numbers to the chart, and the equity has been steady climbing, even though there is a bit of a dip for the 2019-2020 period. The general trend is looking to be that they will continue to climb. So let's see what happens when we get out of the COVID period, and let's see what this new acquisition of Roberts from Massey does for them. I do have a bit of concern, as I said from before, with the equity growth rate, and that shows up in the graph. You can't hide it there. That has been trending downward. Really looking to see that equity growth rate pick back up, and that graph start to turn in terms of what's there. And also we have their debt to their equity. So basically, this, I would have preferred to see the two of them a bit closer, in terms of their total debt versus their equity. But unfortunately, it's not the case. I mean, the equity has risen steadily, as you can see, from 2014 right up to 2018, but then it tapered off in 2019, and it would appear that it's on its way down. So we'll see. And the fact that they're coming with for money out of the APO wouldn't mean that they would add more debt to their financials in that way, in terms of having to pay back interest, etc. So we'll see where that goes for them. So I think, do we have one more set of balance sheet charts? Yes, we do have one more set. So this is the current ratio, cash ratio, those two put to, from the numbers that were there earlier on, these were put to the charts. And as I said, you won't expect a company like Proven to be holding a lot of cash. So normally the cash ratio would be lower, but as you can see, it's actually trending upward in terms of where it's going. I'm also very keen of looking at of how they put their capital to work. So you can clearly see that the capital employed, that's trending upward again, and they've been putting that to work, and that corresponds with the cash that they're holding. So their cash and cash equivalents as well too, very high, and has been trending upward as well. So all in all, on the balance sheet side, Proven is in my view, they are doing their job as they're supposed to do their job in terms of taking in capital, putting it to work, right? German, I don't know if you have any comment to give on this part.
Yeah, I mean, you kind of expect them based on what they're doing to take advantage of cash. There will be considerations to have some just in case they have a deal that is maybe pending and they maybe want to be able to pay for it. So yeah, I mean, everything that we see is kind of consistent with the model of the business, and that's the context really I want to take the ratios in. It's not a blanket number. It's really based on the industry and the type of company within that industry, because sometimes you have industry standards and then a company the ratios don't tell the whole story. It's a part of the story. So they're typically you want to look at. And so we use the numbers to kind of let us know, at a high level where things are headed. And then you use the information that you garner from the articles, from the news, from what the company would have said at their AGM. And then you get a more complete picture of where the company is, right? So there's a lot of things that you can't capture in the numbers, but the numbers tell an important story as well. So everything that we say, as I said, will be consistent with who they're supposed to be, which is good.
Yeah. So I think it was the last set. I think this was the last set of there we go. Yeah. So right. So on this side, on this chart, yes, again the coloring in terms of how the thresholds came out. This side though is dealing with the income statement for Proven and the cash flow statement for Proven, and taking some of the main information basically is taking their revenue generation, taking their net profit, and a few other indicators, and basically doing the calculations accordingly. So something I love about Proven that in terms of a company in that way, their growth rate in terms of their revenue growth rate, right? As you can see there, that growth, because this is actually now the company growth rate. This is actually their revenue growth rate, has just been nice. I mean, even though it might have been down a little bit, and that's expected because they're trying to put it to work, and it takes time for that to give them the return. When it started to turn over, it just really kicked off. And as you can see, as of 2020, that's at like 86%. They had a really good year in 2017. I'm trying to remember. I think that might have been the year that Knutsford was released by them. We have to just clarify that, because that was really high, as you can see there at that point in time. Another very important indicator is their return return on capital employed, in terms of how they put their capital to work. And at the start, I mean, it has been down, but then as of 2020, they had a good year again, and basically at that point in time. So that would have been, and we learned that last night in terms of what David was telling us. That would have been coming, or should have been coming out from the stake that was sold in in access in terms of that 24%, 25%, sorry, stake that was sold there. So basically, for the return on how they on their capital employed, that was really good in terms of putting it to use. So they've got cash to do what they're doing now, right? The company also has favorable net margins. I mean, I would have liked to see it be a bit better based on the threshold that I'm using, but still, I mean, the net interest margin, sorry, in terms of that. So the net interest margin is the comparison to what is gross profit, or the gross profit margin, I should say, of any other company that does production or manufacturing or production, right, or distribution, etc. So for financial companies, they look on the net interest margin of the company. Anything over one, this is actually a known thing. And if you look at Investopedia, if you look up net interest margin, it will tell you. Investopedia is a great way of explaining it. So basically what they stated is that anything over one is actually favorable. If a company is doing 4% in net interest, is really good. So I decided to set my thresholds a little bit high for looking for that. So even though you see it in yellow, they're still pretty good because their net interest margin is at or above 1. And they only had 2 years, which it wasn't, which was 2015 and 2016, but otherwise pretty good. Their operating profit margin, that has been excellent. And the operating profit margin is basically what you can compare any company against another one in different industries. Doesn't matter. So this is how they are managing their expenses, pretty much how Proven is managing those expenses that they have to deal with. And it is good in terms of the fact that you can clearly see every single year they have a high operating profit margin. I also like the fact that this year for 2020, their interest expense ratio, which is their ability to pay their debt, has gone green, and gone green in actually an exponential way, because it's not just it grew by about, what's that, 2 times basically, or close to 2 times. Yeah, it's actually 2 times, right? So that is actually a good thing for them going into this new financial year. And their asset turnover, that one could be improved, but actually, as you can see, it actually is improving because the number is actually growing. So we'll watch at that later on closely. The group knows, Jermaine knows, that I'm a stickler for free cash flow, because free cash flow is that money which you can extract from the business without hurting net profit, without having to go into retained earnings, etc. And having good free cash flow is just phenomenal. Having good free cash flow in the pandemic was basically your ability to weather the storm until things settle down, or your ability to make moves in the storm when everybody else was pulling back. You can clearly see that for free cash flow, which is the line that says FCF and the percentage, for the last 2 years, solidly, the Proven has put that in there. The funniest thing about it, though, is that Proven is not really expected to have high free cash flow because they're supposed to basically put that money directly to work. So as you can clearly see, you have gap years there. So if you look at, pay attention to 2011, that's a high free cash flow there, and then you have 2 years right after where it goes into negative. Based on what Proven does, again, as we've stated, this is expected from them, right? They're going to put that money to work. But I mean, clearly for the last year, you can see that for whatever they're doing, they're planning, they're prepping themselves. 2019, 2020, they have a positive rate, so expect them, and they've already done it with the Roberts acquisition. You can expect them to make more moves, and in the future going forward. The other ones, which are also very important, your return on equity. So return on equity, basically for you, the shareholder, is something very important. I would have liked to see that be improved. There is an actual chart that puts return on equity and free cash flow together. On the American side of investing, I said it in the last meeting that we did, and I'm restating it again. On the American side, for American companies that have very high free cash flow and also have a high return on equity are excellent companies. So at the time, I believe Apple falls into that category, or I think Microsoft as well. Those are your value companies, your income companies. On the American side, they give strong dividends, etc. And they normally have high free cash flow, high return on equity. So this could be a bit improved, but it's not bad in the sense that in relation to how Proven has paid out for dividends to their shareholders, they actually have a high dividend payout ratio. So it can be not overlooked, but you can cut them some slack in my view with that because in that way. The return on assets as well too, that is improving, as you can see, and we'll see how that goes based on the threshold that I'm using. For me, it states that it's low. More than likely, though, I can honestly say that when you put these things to the Jamaican market and Jamaican companies and put Proven against any one of its competitors, this more than likely is favorable, right? So it's just that I just decided to use. I would rather have used a very high threshold to find what I believe is a really superb company, and work my way back from there, basically, right? So the part of the retained earnings, why there are two lines for that. So I have a big up Simon again. In our last meeting, I did make a little bit of an error, or not a little bit. It was actually a big error in the retained earnings and how it was done in terms of the retention ratio. And Simon was very, very good to give me the insight of how that is correctly calculated. So with that, the first line, which is the retained earnings year to date, is what is in the line item of changes in equity in their financials. And then the second part is what is the retained earnings from the net profit for the particular year that we're looking on. So for 2020, they basically, from what I calculated, they basically kept back about $21.4 million in retained earnings. So their retention ratio was calculated at 71%, and based on the dividend payout that they did, that dividend payout ratio was 29, which was pretty low, because that was not pretty low. It was one of the lowest since, because previous times they're paying, as you can clearly see, they're either paying in the high 50s all the way up to close to 80% in terms of their payout, in their dividend payout
Just
ratio.
a consideration of the climate as well. So.
True. Well, yes, because that would have been March, and well, the pandemic would have just been kicking off at that point in time. So I would more like to think, though, maybe it was, well, in climate for them, possible for more so. I would think that in preparation for their moves that they were planning to do, they didn't want to, right? They wanted to hold a little bit back. So these indicators are now going to go to the graphs, and we're going to take a look at how Proven looks based on the trend. So the net interest margin, as I told you, that's what is termed the gross profit margin for other companies, but financial companies, the net interest margin is what we look at. Basically, we can see that it's on a trend downward, and we have, well, go back 1 second, Jeremy.
Right?
Yeah, one slide back before. So we want to basically see that increasing. So we're going to pay keen attention to that. I mean, while a lot of people focus on the gross profit margin, I and by extension this, which is the net interest margin. I really focus on operating. I like to focus on operating profit margin, because I believe that if you keep your expenses down, and to a minimum, you're basically going to have a better net profit. That's actually what happens if you're aware of how it's set up in the income statement. When it's done, you start with the revenue that's generated. You take away the expenses that are there, the operating expenses, and so forth, until you get down to finally net profit, right? So, I mean, with everything that's going on, we hope to see that similar to what the net interest margin was in 2011. Proven would do just that and push over. So we'll see what happens with how their subsidiaries and their associates perform, and the new ventures that they've undertaken, perform for them. So we can go back. We can go forward again.
Yeah.
Similarly, as you can see, the operating profit margin, that one is on an uptick again. It's going up. Pretty much solid. We want to see that for sure. The overall trend though is that it's coming down, but it's not a precipitous drop. So it's fine to, in my opinion, it's fine to have it that way. The company growth rate, as we had spoken about, and as again, this is the company growth rate against its revenue. It was really good in 2017, and then it dropped off. But it's once again growing. It has always had a steady trend upward, so that's expected to be the case. With respect to their revenue and their expenses that we had done analyzed, as you can clearly see, so expenses are always going to be in the negative. So you really want that to be flatlining against or coming closer to zero as best as possible. And based on the chart there, you can clearly see that they are making their revenue in comparison to their expenses. So they're doing what they're supposed to do. They're doing their job, right? And that trend line has it firmly going up. So we can reasonably assume that based on the number of years that have been charted here, revenue will continue to grow at that level that it is currently, right? Next one, Jeremy.
Yeah.
So this one is their net income or their net profit or loss, whichever one comes out, it's net income against their net margins. So the liquidation of the stake in for 2020, the reason why their net income is so high is based on the fact of what happened with when they reduced that stake in Access Financial. As we pointed out earlier at the start of the session, it was an exponential amount of profit the amount that it was sold for, in terms of they bought it for 8.34 million. They sold just 25% for 24 million. So that would have heavily impacted their profit at that point in time. But overall, though, I mean, the company has had, as you can see, they've had steady profits going up. Their net margins also, while it has been coming down, it is turning, and it is making the turn to go back up again. And we expect it to do just that with the further acquisitions that they have, right? So good things to look forward to for them. Good year in 2020 so far in terms of what happens. So the expectation is it will keep on for them going forward, right? I did mention again, or state, I like to look at free cash flow against return on equity. Well, as you can see, the return on equity is coming back up, and the free cash flow, I expect that once they put the cash to work, though, it will more than likely dip. So we'll have a high return on equity, but a low free cash flow based on how they put their capital to work.
That's why you have to take the risks into context, right?
That's right.
Because it depends on what the company is doing.
That's right. No two companies are the same, and not all companies are the same. Each one has their unique strategy or unique advantage, disadvantage, etc. Right? Something I'm very keen on that I like to see for a financial company is the next chart, bottom left, which is the net interest income and the non-interest income. So for those who know, financial companies, where they get their money from is basically from interest income, which is basically income that comes from anything that they put out, such as stocks, bonds, mutual funds, and as proven is a financial company. Getting interest from any of those investments is good. But the non-interest income side is from everything else that they are invested in that doesn't have anything to do with getting interest from it. And it is clear that based on what Proven has done, their non-interest income has skyrocketed. Even though the net interest income of itself, or the interest income, is coming down a bit, the general trend is having that going back up. So I won't give that too much concern. But in all views of what we're seeing there, the trend is both of them going in an upward direction, right? One just more than the other one, which is extremely good. It's extremely good. It means that there's money coming back to the company very nicely, and with that, an expectation of really good net profit. And for you, the shareholder, participating in the company, a good payout in terms of that. And then this graph, the last one, which is the interest expense ratio, that has to do with how well the company is able to pay their debt, as we said. And the higher that number, the better. And as you can clearly see, that has increased exponentially as well too, between 2019, their financial year 2019 to their financial year 2020, which puts them in solid standing for being able to service their debts, whether it be short or long term, as it is right now. Do we have any more charts? I think, was that it? I think we have.
Yep.
Yes. Right. So this one, for those who are thinking about buying the company, the first one is the market price towards their book value. So as a long-term investor, as a value investor, my objective has always been to find a company where the book value is below the market price, or the of the company, if the company is listed, right? Now, Proven, the market price is a bit higher than the current book value, but there is another identifier that I have mentioned before every time I'm on here, called the margin of safety. Jeremy knows this one well, that when you put it together, which is a combination of price earnings ratio and the price to book value, based on the threshold that we use, and it's something that Warren Buffett uses all the time. Once that figure comes up to the threshold, at or below the threshold number, then you want to pay keen attention to the company. You want to start analyzing this company further. Proven, for its market price, both on the GMD side and on the USD side, is below that threshold. So it has been very favorable in terms of the margin of safety. So for that, I have given it that tick by itself. So even though the market price is a bit high, above the book value, it's still favorable, especially on the USD side. USD side is actually closer to the book value than the GMD side. And this chart is actually taken from the USD side. So as you can see, the numbers in the corner are where it's at there. Concerning your earnings per share, which is something we pay very keen attention to, well, that speaks for itself. You see clearly what happened there between 2019 and 2020. Attribute that again to just them doing what they do well, and doing the partial release of their holdings for access, and turning a very sweet profit, for them. The next one is their return on investment and the return on assets. So return on investment basically is return on investment to you and to them and to you. This basically also has started to trend upward in a very steep fashion, both of them actually. So in that we can pretty much expect that going forward. Let's see what the new acquisitions have done for them, and how the current holdings, works out. What the expectation is. This is more than likely going to be much of the same. And then, of course, the last one is this is the return on capital employed, which is basically how they put their capital to work and how efficiently they're putting their capital to work. Now, the trend has it downward just because it dropped off between 2011, the financial year 2011 and 2012. But as you can clearly see, for the last 4 years, so from 2016, come right up to 2020, that has started to turn the corner and go in the other direction, upward. So expect more of the same again for the company doing just that. And these are the things you really want to see from, if you're doing the trend analysis in terms of looking at the numbers, but then putting them over the different financial years, right? So again, overall, proven just feels like a good fit for a long term, for a value investor, right? To be able to comfortably make an entry into them and want to hold them for the long haul. I think we have. Do we have one more?
Let me check. Yeah.
Yeah, we do. Right.
Yes. I mean, yeah, but I wanted us to make appropriate time for Q&A. So,
right.
Probably highlight the one that's most important to you.
Well, on this one, the one that's most important definitely is the cash and cash equivalents. That one definitely is super important in terms of how much cash they're holding. Because as a company, as the type of company that they are, they want to be able to have cash to put cash to work, right? And having that cash, they want to not have to untake any further debt if they don't have to. So having their cash equivalents rising in that fashion definitely is a massive plus. Yeah. So that's basically it in terms of how proven looks from the analytical side and the numbers side. Right.
Okay. And let me just be sure that is it. So what I'll do, I'm gonna pull in David Rose now. Let me stop sharing for a sec. David.
Hey, David.
How are you doing, man?
I'm on Jeremy. You guys can hear me perfectly, right?
Yes, we can.
I'm going to turn on the video in a second. Cause remember that is flow, so I just want to be sure that everything worked out fine first.
Okay.
Just give me a second.
No problem.
I don't want the video to be the reason for a lag.
Yeah, agreed. So I was trying to ask in the chat to see if we have any existing proven shareholders. I haven't seen a response as yet. I'm actually a shareholder myself. I view the company. Well, I'm a long-term investor. And just speaking with David, David just is the person I go to for information on the company. So David would have written some articles. Let me share your link tree, David, for persons to see, because it's a valuable resource. Mm-hmm. So I just posted the link. Persons can feel free to click on that link to check out the articles that David has written. He writes 10 articles a week or something like that, David.
No, not much, but I write a good amount.
Yeah, when you do. So I think that link is there. Persons can just bookmark it and check out the articles that you've written. So David, in terms of your outlook on proven, we just went through the numbers, right? So in terms of all the things that the numbers won't say, what's your outlook on the company?
Considering what it through earlier this year, in the sense that even for IFE, which took a slight impact, because of the environment in the Cayman Islands, the rest of Proven has been relatively solid between the subsidiaries and the associate companies. So, did you get to go through the associate versus the subsidiaries earlier?
We went through, yeah. Yeah.
All right, I just want to clarify that for sure. So right now, the subsidiaries are basically contract to the prior financial year's levels. There's still some decline because there's lower business activity. Otherwise, it's still a great offer because that is one standpoint in the sense that it was being offered to us at 28 cents back in US cents back in March, and now it's basically between 0.225 and 0.23 US cents.
Yeah.
And it's really, that price is relatively much close to the book value of proven. I can't remember the exact value right now, but it is still trading the current book value.
Yeah, that's what Chika was saying. Mm-hmm.
And I'm pretty sure you already mentioned about the tax-free dividends and just the positive outlook and even the acquisition that they announced yesterday.
Okay, no. So actually, was about, talk a bit about the tax-free dividends. We didn't go into that piece.
All right. So for those of you wondering, what is basically the tax-free dividends policy and everything? Essentially, a policy. It's a function of proven quote-unquote tax efficiency. So Proven was the first company to basically pilot that model in terms of providing that kind of value to shareholders. So in the Caribbean, we have something called CARICOM, the Caribbean Community, which is basically like something similar to the EU. And one of those benefits that exist for CARICOM is that if a company pays shareholders, well, say for example, a CARICOM member or a company is incorporated in another CARICOM territory pays shareholders in another CARICOM country, those dividends aren't necessarily taxed. It's called a double taxation treaty, meaning that it can be taxed twice. So because of that, Proven is incorporated in St. Lucia. Yes, Proven is incorporated in St. Lucia. When they pay dividends to us here in Jamaica, we don't pay income tax on those dividends. So as a result, or withholding tax. As a result, the gross dividend is equal to the net dividend. So when Proven speaks about their 5% dividend yield, which is simply the total dividends for the financial year with respect to the stock price being around 5%, it just means that the dividends they pay out each year with respect to the stock price is like around 5% of the market value. So when I did my math, basically Proven has paid about like 8% or more from their, or you said on the JSC 2011 in dividends. So if you had basically just bought Proven and just didn't think about the stock price, you'd have gotten like almost 4/5 of your money in dividends without even looking at the stock price, which would have been a solid return for type of investor you are. Because the thing is, most dividends are paid in US dollars. So if you own the JMD shares, you would basically pay. Even the JMD shares, it basically pay. You get paid in JMD. When the USD shares get paid in USD. So Proven was the first company listed on the USD market, and they should get listed in 2016 by cross-listing on the JS and JSE's main market. So most events are paid in JMD. To basically go further and analyze and Proven, people. So when you think about Proven, you have to remember that Proven is a private equity firm in the purest sense.
Yeah.
So unlike the typical firm, which would probably just create new products or develop new services fully, Proven's main focus is on acquiring great companies or making great investments to realize in a later time frame. So for Access Financial Services, they acquired 49.6% in call it end of 2013, start of 2014 for 8.34 million US 8.34 million US dollars, and they sold about 25% of overall Access shares, which is basically half of their holding, for 24 million US dollars.
Yeah, man. Yeah, man.
And that's 2019, so that's a significant return in terms of a private equity exit.
Yeah, man. So
we did mention that.
yeah, man, went into that. So in terms of, I mean, there's a question by Mona Lisa in the chat. I mean, what negative concerns, if any, are there, for any of us regarding Proven? David, you can go first, and then Chike. I mean, for me, well, yeah, you guys go first, and then I'll share my thoughts on that.
So right now, the major concern we're Proven on my side really and truly is the tax chain in St. Lucia or you're just in Southern Caribbean Islands. So
Okay.
because of the Panama Papers, you guys under the information that after a lot of Caribbean countries that update their IBC Act. So as a result, I'm waiting to see how Proven is going to make sure that they mitigate any risk of them have not been able to actually be compliant in effect to benefit shareholders with those tax-free dividends. So that's one genuine concern. Another concern would be just Proven's nature to always come back to market, meaning that if you're concerned per se about your overall holdings, then you just not every couple of years you have to invest more into Proven if you're willing to maintain your quote unquote existing holdings.
Okay.
So it doesn't actually mean that when Proven is going to pay us in less in dividends or possibly anything else, but if you're a person who's concerned about the general holdings in the overall sense of the company, then it's a relatively early to be concerned in that sense that because Proven is a company that doesn't really keep cash on hand just for waiting purposes.
Right.
They put I need a particular amount in treasury just for maintain operations. Otherwise, that's the sense. And you also have to look at the quote unquote reality surrounding just the Caribbean region right now.
Yeah.
So Proven is focused more in terms of the Caribbean region per se, versus like probably another company, and the JC probably exports to the US or exports to another region. So Proven is generally exposed to our economic environment of the Caribbean, which isn't a bad thing because that's their main focus area, but it's a concern nonetheless.
Okay.
With respect to Proven's positives, Proven Investments Limited doesn't have any employees, so they don't necessarily carry certain overhead costs for operations.
That's
Proven
right.
Management Limited is the company that manages Proven Investments Limited, and it's run by a team of several leaders and different board experts per se, which basically ensures adjudication process occurs for any investment.
Yeah.
And you have to look at the fact that Proven has some great exposure to some great companies. 20% exposure to JMB, which in turn has exposure to Sagicor Financial Company and so on.
Yeah.
Proven just getting more into the real sector with various manufacturing. They have their Dream Stake as well, which is minuscule in the real sense that Proven paid, I think, about $600,000 US. I don't quote me that. It was 75 million GMD translated terms for 20% stake in Dream. So it's exposed to the real sector. So Proven is still this financial services altogether. It's really exposed to financial services, but it's not fully financial services. You have the real estate component, you have the real estate component now, you have the private equity component, and there's also just the relative stability in terms of Proven's price. So even though Proven at times might have some slight variations in the US dollar terms on US dollar share price, there isn't any significant wide variation that would make it extremely concern because Proven was as high as like 38 cents before COVID. So
Yeah.
it speaks a lot to the person's confidence at the time of the company.
Yeah.
Because we're talking about people truly trading the price well above quote unquote value, which is what we use as a simple metric.
Yeah. So I
And
mean,
final positive I can just think. So I was saying final positive I can think of right now would just be the companies demonstrating their ability within the last 10 years, because it's a 10-year-old company. $20 million they start the company, and there's a 620 going $650 million balance sheet. So that's a pretty interesting structure as a company.
Yeah. Yeah. I mean, yeah, so I agree with all the points that you just made. Chike, you're on mute. So yeah, I agree. So for me, it's really tough when I look at the company and what they do. As a shareholder, I'm not concerned in the short term because I don't take them to be a short term. Like, you're not going to, though the company was trading actually pretty well before COVID because of the uncertainty we have now, that's you're not really sure how the price will move in terms of appreciation in the short term. But again, just looking at their track record for maybe the last 10 years, if they perform the same, if not better, for the next 10 years, then at least exactly. So from that perspective, I'm not really concerned about the company in that regard. And it's really just to say, okay, well, we'll get to that question. I'll leave that for David because David has some interesting thoughts as to why you can follow USD or JMD. But so I mean, so there's a meeting that we had, I think, in May that spoke about investor profile. Before you invest, it's good to know what your profile is. So Proven fits the profile of a long-term investor, in my opinion. So if that's your objective in purchasing, I think you'll be all right. But if it is that you're wondering how much it can go in the short term, that's extremely hard to say for any company right now. There's no way to predict how the market will respond, and that's simply because we're still in a lot of uncertainty. So it's hard to say, and if anybody says that, they're guessing. So that's pretty much how that works. So Chike, you have anything to say in terms of negative and positives that you see?
No, I echo the same sentiments for both you guys. And as I pointed out, knowing what we know about how Proven puts their money to work in terms of them being a private equity company, and having primarily in the financial side, it's just expected that we shouldn't really be too concerned about certain parts of their financials in terms of their balance sheet. That was pointed out earlier on in terms of the debt, etc. Also, there's not much to be concerned about in terms of their cash because we expect them to put their cash to work, and it is actually commendable to see that even though they're putting their cash to work, they still have the ability to hold such a high level of cash as well too, which speaks to the overall generation of revenue and return to the company, right, in terms of profits, etc. So I mean, in the grand scheme of things, this company, and I agree with you fully, this company fits the profile of a long-term good value investing company to be holding for that purpose, right? Short term, can't say where the price is going to be going. That's not how they do things anyway as well too. So we need to restate that Proven does not do their investments on a short term basis. It is done, in my bias, the right way, which is the long term. It is given a chance to really grow and provide those astronomical returns.
There's no right or wrong way, Chike. There's ways to invest and trade. I do both, so there's no wrong way.
It's my bias.
There's a question, David, around which is better. Well, long term, which is better to hold, Proven USD or Proven JMD. I think you have some thoughts on that you were sharing with us before.
All right. So to answer a prior question I saw earlier in the chat about who are key investors. So if you're giving the perspective, it actually defines who are key investors. So that's somebody who's going to invest like 75 million JMD, and I believe the equivalent to like 500,000 USD. I'd have to go back and check, but I know it's 75 million USD for sure, but a key investor in JMD terms.
Yeah, that's right.
It's a definition, so you can check.
Yeah.
And in respect to which investors to hold, so remember that Proven really and truly just around 2016 started to actually offer so in essence, offer the ability for you to have GMD shares. So before that, we were strictly in USD terms. So compared to Signal, actually show you the breakdown of the capital structure, which was like 53% USD, 47% GMD. Signal is proven is really and truly mainly like a USD built company. So the capital structure. So as a result, what you basically see is that for proven USD, it's a stock that really and truly moves in value. The JMD share price doesn't really tend to move that much or should trade in terms of some volumes compared to like the USD. So the USD can easily have like a million units trading, 500,000 units trading, and there's a large scope, if you want to say, of range, if you want to say that, of, you know, when you think about the ability for the price to move. So the JMD itself is per se, is I should say, less liquid in a sense, which you understand better now based on my explanation. You can actually check it out on the JS's price charts, but I want to say which one invest the whole per se, long term or long term fully. I don't retire advice, but look at it from this simple perspective. If you own the USD shares, you're going to get USD dividends. So when you get the dividends, it's absolute. When you get JMD dividends, that's going to be a function of the market rate at the time, which means that the JMD dividend price or dividend per se can always be higher or lower within the time of the year or when it's paid, based on the fluctuation, the volatility in the JMD US dollar FX rate. And you also have to consider that even for this offer right now, you did the conversion for proving USD to JMD, it came to like 145.70, 146 US dollars. So if someone was to get source US dollars below that rate, it will quote unquote more prudent to get the USD versus the JMD shares.
Mm-hmm.
So that is where, from my perspective, you can probably find value in the APO right now, in the sense that you can get the USD shares at a quote unquote relatively lower vis-a-vis price with respect to the JMD, and you can source US dollars below 145.70. And with respect to the trading above book value on the JMD side. So when I actually improving, I looked at what the JMD and USD shares, and in most cases, the USD was always trading closer to book value or significantly below the quote unquote vis-a-vis rate to the JMD. So we tend to find that because the JMD is so relatively liquid, what ended up happening is that the USD share price at times tends to be trading under the value of the JMD. Even though the JMD is like 38, USD share price is like probably like at 0.26, for example.
Right.
So when I said we discussed the companies, let's look at value in terms of on the same terms. So compared to the JMD, because kind of use FX in the market to just say, all right, like this quote unquote currency value for the company, JMD or USD, what's the value for me? Because as I said, there are other companies who have this similar quote unquote market activity whereby the JMD probably trades more than the USD, or USD and JMD trade relatively in tandem. So it really and truly comes down to what you want. But as I said, for me, this is where I consider the most prudent opportunity for me to make my US dollars work for me. This is in my perspective compared to what is offered in the bank, between the dividends and the capital gains that exist.
So to just add to what you're saying, David, I mean, that is really for you to decide, the person who asks the question. The only it I mean, it depends. From the diversification perspective, I do personally hold USD investments to be able to just have some risk mitigation against the JMD. So from that perspective, it may make sense. And for everything that David just mentioned as well. So I mean, you want to make those decisions from a holistic perspective. It's really it's good to have some amount of diversification so that you are protected in the event of unplanned events. So if you have a largely JMD portfolio, having it in USD here may be a good thing, especially since it's a long-term company. So since the key word in your question was long-term, then you're pretty much making a judgment call as to whether or not you think long-term the USD would be better to hold than the JMD. That's the way you answer that, I think. Chika, you had mentioned about I'm trying to remember the slide, but Mona Lisa just asked the book value versus market price. Can you explain that? Let me see if I can bring it up as well. I remember what you were on the slide.
Right. No problem. Well, so as we were saying, as a value investor, I constantly look for a company that is at or below the book value, because the book value of the company is the calculated value based on the company's financials itself, right? Whereas the market price, as you know, or if you didn't know, the market price is based on is basically a perceived value. Another important thing to note is that the market price has no impact on company performance. So it is again all perceived. So you're as a value investor, we try to find as best as possible companies that are trading at or below book value. And if it's trading above book value, we should be doing due diligence to make sure that we definitely know that by best guess, we expect this company to do well in the future, to go past the market price that we are willing to pay for it. So, as we stated before, David stated as well, the market price versus the book value on the USD side of Proven has been more like close as very close to each other, and tends to run very close to each other. So as such, with that being said, and based on the fact that I also use another term called margin of safety, that coupled with what the market price and the book value is, if the margin of safety is very high, which is what I want to look for, then it gives me an indication to really think about taking a serious stake in the company. For Proven, that is exactly the situation. For Proven USD, on the USD side, that price is actually closer to its book value than the price on the GMD side.
Do we have the numbers, Chika? I know you have the ratios. Do we have Claudette is asking for the actual number? Did we have that?
In terms
I think
of
pulled in the data, right?
I don't have that. Well, no, we didn't put that actual number inside of the chart.
I'm calculating it right now.
Well, I have it of itself. So the book value as at, so let's take March 2020 then. The book value was 17 on the US side. That is, the book value was 0.17, right? And the market price as at March 2020 was 0.26. With the current book value, Claudette, well, actually, David, the book value now, because we've gone 2 quarters into Proven's new financial year, so we would have a new book value.
0.19. Right. Yeah, so 0.1948, but basically 0.19. So
right.
So
and the APO's price is 0.22, basically. So okay. I mean, as you can see, it's even closer, right? So definitely, that is something where that's definitely favorable that you want him looking at. We'd have to calculate it on the GMD side, but as I said, couple that with the indicator of the margin of safety that I use, Proven is flying very nicely below the radar in terms of having a good margin of safety, so that in the event if I purchase this company, and margin of safety is basically taken that it is expected that if I buy the company now, 12 months from now, 1 year, I could expect that my return will come back above that price that I paid for it. So with that being said, at least in what we should start to see a return on our investment within a 1 year period at the very least, right? And it definitely will get better as you stretch that time out, 2 years, 3 years, etc. You can clearly see that or you've clearly seen that from the performance of Proven, in terms of the charts and in terms of the figures that how they generate revenue and how they return it in terms of net profit.
One thing I was going to actually point out was, so even in at one point, like 3 points during COVID, like in June and even in September, Proven actually fell to like 18 US cents, 20 US cents. And that was a steal for me. Like, as much as cheap, that's really a steal, because that's what you talk about. Like, you were just preparing for the rain to fall. Because, no, I'm serious.
Yeah, no, you're right. You're right.
Because I think what I did when during COVID was, so Proven at the peak like around 28 US cents, dropped my bucket at 0.20, and I just looked in J3 and said, oh, order filled? All right. Like, a million users passed through the queue, and the stock price halted. And I'm like, oh, Zine, I'm in a great company, a bargain, a real bargain.
That's what we look for. That's what we look
so
for.
This Cygnus. So for those who, well, I think Cygnus is closed out now, but we did a meeting on Cygnus a few weeks back, and I was saying that what I do when offers are out, I kind of watch to see where the price heads, because right now Proven is trending close to what the offer price will be. So I mean, depending on what it is, because it says that essentially will be listed February 26th. So if you do that math, if you invest money now to kind of expect to get something when it is released, that's maybe 8 weeks. Whereas you may be able to just spend, directly the amount that you'd want to spend on it now without possibly tying up any cash. Not that, I mean, depending on the offer, your cash is not always tied up, because depending on the size of the offer, the price per share, I normally see where some offers you get close to full allocation or full allocation because the nature of the offer. So if it was like a lower share price, then maybe you'd have more people applying, more oversubscription, so you may get a percentage allocation. So I mean, weigh those things carefully. So the price, I think at the end of today, was $34. The offer is, I think, $33.80 for new shareholders. That's not very far. That's 60 cents. So who knows if by the end of the week it may trade at $33.80. You may be able to just buy it now and not have to apply and wait a couple of weeks and all of that stuff. So you can take those things into consideration along the lines of what David just said. Because if it is that you have a target price, you may be able to get it on the market without waiting for the offer for that price.
And I'm glad you said that, Jermaine, because that's how the most recent APOs I've seen, they've been trading relatively closer to basically to their offer price. So you have to really take into consideration our strides. Yeah. So it depends on where you float, because for Cygnus's APO raised in shareholders, it was 0.127 and it never reached anywhere near that. With like 0.14 USD, which was like the general public price, but raised in shareholders, the incentive was greater.
It reached it for the JMD. Cygnus got
for the JMD, but for the USD, it worked out.
Yeah, exactly.
And the thing is, Cygnus priced their offer based on the market price, versus Proven, who priced theirs the JMD off of the US dollar price. So what I mean by that is, okay, so when companies like Proven and Cygnus and others who are actually specialized in US dollars, basically go to the market to get more capital, they tend to price their JMD shares off of the USD price. So the effect rate is 145 for the time. 145 times that 1.22 rate is the GMD price. And sorry about that, guys. JPS just kind of decided to be crazy today.
Yeah.
But yeah, so what I was saying was that yeah, and Shanayan is right actually. So
Yeah.
even with the another APO that came out recently, where they gave us until today, well, today is opening day to actually be a shareholder to qualify the shareholder discount. I found that to be a great opportunity. Instead that if you didn't actually own the company before, get just bought a share. I say it doesn't matter the price and just got into this APO at a significant discount compared to the market price. So the shareholder discount is really a big incentive if you actually pay attention to these companies. So you have Pulse, RGR, Panjam, other companies coming up for the APOs shortly. So I have to just be careful because some persons say, oh, everybody was messaging me when it's proven record date. I'm like, guys, with December 23, you already missed it. So
exactly. And that's the thing that it's not very common that you get to, you're not going to know until the offer is out what the date will be. So you said an excellent point in the last meeting we had with you, David, that it's good to hold at least one share. One share at most is going to cost you, what's the most expensive company? Probably $144 at the most, because you can buy one share of any company now. So, I mean, just buy one, let it sit there, and you're always an existing shareholder.
Thank you. You buy and prosper.
Policies would be the
well, no. We're not going to mention them. We're not going to mention them. So, okay. For example, guys. You have persons who are saying, "Oh my God, I miss the signals." I know somebody who said he sold all his signals and back on the actual record. I'm like, John OG. And I'm like, Reggie, the APO is coming shortly. Keep a share or something. I'm like, he's a learning lesson now, but imagine you said all these shares and you buy back on the actual record date. And they said, Signals in this case give a 10% extra discount to shareholders compared to the regular general public price for the APO. So you get what I'm saying?
Yeah.
So it basically plays out in the sense that as I do, if I make a trade of a company, I make a profit, and I'm ready to just exit my position, keep a share, just because they don't might happen in the future. Look at it. Because if a key share, the rights issue, if I'd proven our signal share qualify for the APO, could have bought a diamond share up to Monday, qualify for the APO, and other APOs are coming up. So if you want to share and the discount is relatively attractive, then you're in good spirits.
The only thing that's gonna annoy me about that is seeing one share in the bike.
and you're gonna grow a very large portfolio.
No, Jeremy. The discount, if the company is solid and you believe in it, and you're getting a sweet, and you're getting a sweet discount from the company. What's spending like what $16, 32, 12 US cents or something like that just to get a even better discount because you just spend one unit. The discount you get is probably like 20 cents or something like that off of the like probably USD or whatever of the market of the offer price, which is pretty good. So
no, it makes sense, I get you. I just don't like the idea of buying one share. I think if it's over a certain price, you should say, hey, if it's like an NCB, sure, you can buy one share. But imagine buying one share a week ton. I mean, like.
No. I'm not beating that. I'm not beating that. But I'm just saying, they're talking about companies we know coming with offers, companies with solid track records, and we can actually say, all right, we're not sure if we want to, because the thing is, when the Signals APO came out, I saw at the market price like around 16 cents, and I put all into the APO. So I think about APOs. If the price is relatively far from what your current market price is, you can take opportunity to just sell that market price, buy back into the APO to share, and you can discount and get more shares.
Yeah.
There are many ways to eat a cake, so that's why I said one share works.
Yeah, and those are the kind of things that kind of can give you a added advantage, right? There are certain strategies that you learn over the period of investing / trading that can make a difference. So I was actually planning to do a video in a couple of weeks about the impact of fees, and the difference between doing 20 trades per year, versus buying and holding at the start of the year, things like that. Stuff we talk about in our group all the time. So yeah, it's a good point. So we'll take one final question, and then while we're waiting for that question, I'll ask you guys to just share your final thoughts on Proven.
Who's
Go
going to
ahead,
go
David.
first?
Yeah, go ahead.
Go
Yeah,
ahead,
you're
David.
going to go ahead. Oh, all right. So, really and truly, Proven right now is talking about going to Barbados, to acquire rubber manufacturing from Massey. He's going to open some pretty interesting doors because it will basically mean that Proven is venturing more in towards the real sector for their quote unquote private equity opportunities rather than stay focused within the financial space. And Proven is relatively diversified from a geographical perspective and from a asset class perspective as well. So you have the real estate component, you have the trading securities opportunities, you have these other companies generating cash flow, you have companies in the Cayman Islands, St. Lucia,
Yep.
Barbados going forward, Jamaica, and you have a variety of quote unquote opportunities to get exposure to these different areas or scope of different assets. So you're basically when you get improving, you can create exposure. And I pointed out, basically that with proven, you're talking about the 5% tax dividend, 5% tax-free dividend yield, which means that every year you can about 5% of your money with respect to the stock price, which is unbelievable compared to even a bank account, which is going to offer you 0.01% in interest. So you really have to take it into strides of what works for you. Because for me, Proven was the first company I purchased in 2018, and it's doing pretty well for me in the sense that my money has performing much better compared to what's in a bank account that getting a cent per month. Because this one Proven dividend check surpasses
Correct.
any check I can get in the mail. So that's just by basically showing the example of and the thing is I buy discounts are proven. So I don't buy what you quote unquote call premiums. So I bought my phone at 20 cents, once again at 26 cents, at 20 cents again. Right now I'm getting AP again at 225 cents. So as I said, for me, I'm all finding improving at discounts and eating and getting benefits from those dividends. And what I've also done is that and that spread that proven trades at between like point 0.2 and point 0.3 basically. Sometimes I'll sell at like probably like in the peak around like 0.28, 0.29, and sell back around like 0.25, 0.24. So I can actually basically own more shares with the same value of money without actually putting in more capital. So there is that opportunity for you to increase your holdings over a time frame without actually inputting more capital into that investment, which was like
Yeah,
about proven.
yeah.
So,
So for the
and
persons who don't
so,
trade or have access to day trader, you can actually just send your broker the company, the price you want to buy at, and tell them that to set the order as good until filled. So the same thing that David is talking about now, you can achieve that through a broker. Just tell them that that's your price, and they'll leave it in the queue until filled. So
oh, and in respect to
yeah,
that person's question, so for Claudia's question, you can highlight that, Jermaine, about upcoming APOs. So you have RJR, Panjam, Pulse, Sterling Investments Limited, which has been a very quiet company.
Yeah,
So,
that's mine.
so, so, so those are the upcoming APOs. And I agree today they're probably going to do I rights issue or APO. We don't know as yet, but those are the known companies coming out who are intending to stay here will come out with APOs because we need money. Because
yeah,
codependency is some great opportunities for companies to acquire other companies at significant discounts and just enjoy the environment right now. And hope we get everything, Claudette, and Pan Caribbean, Panjam Investments Limited.
Pan Caribbean no longer.
So yeah, that's really and truly my final thoughts on like proven, to be honest, because everybody their investment purpose will be different. For me, it's knowing that my money works better in a US dollar listed company rather than just being in the bank account alone. Because if $100 in the bank and I'm getting, for example, just a penny per month, 12 cents for the entire year, versus, for example, it's in a tax-free dividend of probably like $5 for the $5 in a sense for the entire year, $100 US, then it works out fine for me. So,
Yep.
and I
Get money
said,
to
for me,
work.
the stock price is just a function of the market because I get my discounts if I have to sell for an emergency. I'm leaving in green, not in red.
Yeah.
Yeah. All right, Chike, anything you want to close out with?
For me, looking at the company, I would feel comfortable going in personally. I feel comfortable going into it long term, and also on the US side, based on where it is, just because income, is exactly what David just said. You have to put your money to work for you, and it has been a solid performing company over the years. So them coming to ask you for additional capital, you can see that it's clearly there that it more than likely would definitely be put to good use, right? So,
Yeah.
and from that standpoint, from that long term standpoint, yeah, I'm comfortable
Yeah.
with that in terms of what they're doing.
So I would say just a few things to consider. The same thing that I just mentioned. I believe on the first slide we showed, it mentioned when they're planning to list. So with the other offers that we just mentioned, what I find is that they're typically right after each other. So we don't know when the next one is gonna drop. So you want to invest in companies that you are absolutely sure you want to take a position in, because otherwise you may tie up cash, or especially if the company doesn't give you the short-term response that you're expecting. Just kind of consider that before you make a decision. It's best to just you can only make decisions based on the information that you have, so you can't kind of hold money and wait. But what I'm saying is just make sound decisions, right? So to invest in USD,
I
Claudette,
can
you
cover
just
that.
yeah, man, I'll let you answer that. But yeah, go ahead and just answer that, David, and then we'll close out from there.
All right, so one correction, Alliance Financial is an IPO for one, and we're not sure if that's going to open back up by January 28th. And respecting in the UK, for so basically, if you have access to JTrader Pro, would deposit money with your broker to the brokerage account or estimate account for US dollars, and it's buy shares like that. So now with JMB, they create a separate JSST account for you to hold your US dollar investments in, a separate US dollar EMA account versus the JMB EMA account. So you can just probably contact JMB about that. And then for like, because Sagicor or another broker, I deposit money to the quote unquote settlement account they have, and I just ask them to fund it to my JTrader Pro account. So that's how I get to invest in my USD into those USD listed stocks. Or before we got this access to actually invest in these USD listed stocks, because in the past you actually had to go to your broker. I would just send money to my broker, and I would tell them the price, to calculate the fees ahead of time, and say a limit price, good, and I just left good until filled and just waited. So you can, those are the basic ways you can basically get around to invest in your USD into those US listed stocks. So you need to contact your broker and find out what mechanism or way do they facilitate investing into US listed stocks, and
Yeah.
that's basically it.
Okay. Yeah. Yeah. So Claudia, just speak to your broker. So if everything that David just said, so just find out how your broker does it, but it is entirely possible. So it would definitely be a good idea to just get to mitigate the risk at the JMD. Just good diversification practice that we recommend here. So thanks everyone for joining us. Thanks David. Thanks PK. We're hoping to have another meeting soon, so stay tuned for that. If you haven't subscribed to the channel as yet, please do so now. Leave us a like. That greatly helps us to be able to grow and to reach more people. And we ask you to share this video with at least 5 persons if you're able to do so. And just stay tuned to our social media for the next meeting. So that's it. See you.
Yeah, guys,
It is it.
take care.